Yeah, you can purchase stocks through a dealer or an advisor. If you do go the self-directed route, there's tons of options out there right now. We've all seen the Wealthsimple and the Questrade commercial. This is really, if you're investing in your TFSA or in your RRSP, don't even worry about it. This is only if you have a non-registered account.
Okay.
And it's self-directed and you're like day trading or buying and selling stocks even just once or twice during the year. When it comes time to do your taxes, you got to claim the cost, your cost, and the sale price. And there's these new slips that came out a couple of years ago called T5008 slips that your bank should send you. Sometimes they have the cost for that share on it. Often they don't. So you have to really just keep all your trade summaries slips.
Okay. And then you submit that when you do your income tax filing?
Yeah. And you're taxed on your capital gains. If you have capital losses, you can carry those forward back 3 years, forward 20 years, and apply them against capital gains.
Couple things to note, like Matt mentioned, those T5008 forms, they're not perfect, and they do often get spit out and into your hands in the mail with just proceeds. So they won't have the cost. So be careful. Make sure you know the cost of what you bought something for if you sold it, because if the slip only has the proceeds, that means CRA only knows the proceeds, which means if CRA challenges something, they see the proceeds as a full 100% gain that you're taxed on. And so you have to give them support. If they challenge it, you have to give them support to show the cost. So that can be a big one. Couple, like some of the most common simple tricks, selling, like there's certain rules between right near the end of the year. It's always good to take a look at how if you have an investment portfolio, how's it done? Do I have a huge gain that I'm about to report come tax time? If I do, maybe I want to take a look and pick some of the losers and sell them at a loss, because that loss will shrink your gain. It'll apply right against it, and you have to wait 30 days if you want to like purchase that back for the gain or for the loss to kind of solidify. But there's some simple ways to take advantage of the way the tax system works there.